Right, hi everyone. Welcome to today's pre-market live analysis brought to you by IC Markets. Right, Happy New Year. Just want to wish everyone Happy New Year and good to see you, Nick. Yeah, definitely we'll be covering the dollar index and Bitcoin as well. Right, right, and I just want to make sure everything's good to go. Yep, I think we're pretty much good to go. All right, before we start, please take note of the disclaimer. Right, this is marketing communication. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra, and this webinar series is brought to you in a special partnership between IC Markets and the Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look at what's coming up on the calendar this week. Right, it's quite a heavy week as well. We've got CPI data out of Switzerland and the EU. It's also jobs week in the US, where we've got ADP employment report out on Wednesday, 8th of January, and as well as the BLS employment report out on Friday, the 10th of January, where we'll get a look at the unemployment rate and, of course, the highly anticipated non-farm payrolls. It's sandwiched in between. We've also got the meeting minutes from the FOMC, the minutes of the FOMC meeting that took place in December of last year, right? And that's on Wednesday as well, 8th of January. Right, so of course, we'll start the analysis on the dollar index, work our way through the majors, cover the commodities, indices, and we'll cover Bitcoin as well. Alright, and of course, if you have any other requests, do drop them in the chat box and I'll be more than happy to go through the analysis with you. Now, so here's the calendar for this week. Right, you can see aside from US jobs data and inflation out of Switzerland and the EU, we also have inflation data out of Australia. We have inflation data out of China, retail sales out of Australia, and a few other things going on as well. Right, but I just want to bring your attention towards Swiss CPI that's out on Tuesday, 7th of Jan. That's at 7:30 a.m. GMT time. We also have the the flash CPI data for the core and headline CPI for the Euro area. That's on Tuesday as well, 10 a.m. GMT time. Australian CPI is out at 12:30 a.m. GMT on Wednesday, 8th of Jan. Then we've got ADP non-farm payroll, ADP employment report out at 1:15 p.m. GMT time, Wednesday, 8th of Jan. FOMC meeting minutes are out at 7 p.m. on that day. And finally, on Friday, non-farm payrolls and the unemployment rate will be released at 1:30 p.m. GMT, and that's at 10th of Jan. All right, taking a slightly closer look at Swiss inflation, right? We can see that headline CPI has deflated over the last 3 months in September, right? And the forecast for the forecast for December points to another month of lower prices. Right, so you can see inflation clearly has been very soft. Prices have been falling over the last 3 months in Switzerland, and it shows in the annualized rate as well, right? In the middle of 2024, headline CPI was coming in at around 1.3% on an annualized rate, dropping all the way as low as 0.6% in October and ticking up slightly in November at 0.7%. So we can see inflation clearly is under control in Switzerland. And with December's reading showing another month of lower prices, right? This would mark the fourth consecutive month of lower prices. We can expect headline CPI to remain to remain low as well, right? So we are quite likely to see the franc come under pressure on Tuesday 7th of Jan, right? Quite likely inflation is going to continue to trend lower at an annual rate in Switzerland, and then would put further pressure on the Swiss franc. Looking at the Euro area, we have the flash reading for the month of December, right? So over here on the chart on the left shows headline CPI, which has been pretty stable over the last 3 months, coming in at 2.7% at an year over year since September, while the core reading has accelerated over the last couple of months, right? This was due mainly, largely due to base effects, as last year's sharp declines in the energy prices are no longer factored into the annual rates. right? When looking at the forecast for December, right, the flash forecast tells us that core CPI is expected to accelerate to 2.7% for the month of December, while the core is expected to edge lower to about 2.4%. Right, so although inflation is still relatively or is not exactly at the 2% target for the euro area, right, we can see that it has remained pretty much under control and is likely to move lower as well, especially when you look at the manufacturing sector in Europe, right? The manufacturing sector has been significantly depressed. Manufacturing output has been significantly depressed for the euro area, right, putting downward pressure on prices for raw materials and manufactured goods. So quite likely, we're going to see this forecast coming, the flash results. Sorry, the flash uh, results are likely to come in line with their respective forecasts, right, and that could put further downward pressure on the euro. And coming to U.S. Jobs Week, right? We have ADP employment report that's out on Wednesday, 8th of Jan, 1:15 p.m. GMT time, and we can see that for November, right, the ADP report added 146 workers to payrolls, right? This was the lowest figure in over the last 3 months, while October's reading was revised down lower to 184, revised down to 184,000 as well, right? Looking at the 12-month average for ADP, right, the ADP employment report 12-month average stands at 155,000, and we can see that November's figure was clearly lower than that, and we can see December's forecast coming in at 131,000. So starting to see a downward trend or slower rate of growth for ADP employment report, something similar to what we saw in the second quarter of this year, right? The second quarter of this year, we saw the rate of growth for ADP figures slow down quite significantly, right? Slowing down over five consecutive months, and after rebounding in September and October, it looks like November and December are heading in the same direction. Now, a lower figure, right? If we do see a report that shows us jobs growth not being as strong, this is quite likely going to put some downward pressure on the US dollar. Looking at the FOMC meeting, right? FOMC meeting minutes will be released on Wednesday as well, and the latest rate cut was actually a hawkish rate cut as well. So despite making a third consecutive rate cut uh, back in December, right, the SCP projections, or otherwise known as the dot plot projection, now anticipate just two rate cuts in 2025, totaling 50 basis points. This was significantly lower than the original projection that had forecasted a full percentage point of reduction. Otherwise, that would have been 100 basis points. So we can see, despite the Fed making three consecutive rate cuts in 2024, they're now only they're now only planning for two more rate cuts, and each is likely to be 25 basis points in 2025. So hence, this latest meeting was identified as a hawkish cut by the Fed, and we can expect the minutes of this meeting to showcase further hawkish outlook among FOMC officials. And finally, the Bureau of Labor Statistics, right? The Bureau of Labor Statistics will release its employment report out on Friday, 10th of Jan at 1:30 p.m. GMT time. Now, just taking a look at the unemployment rate, which is the chart on the left, right? Unemployment rate edged up slightly higher in November to 4.2%, and it looks to be it looks to remain unchanged for the month of December, right? We have the forecast of 4.2%, so we're expecting to see unemployment rate remain unchanged at 4.2% for December, and we are expected to see non-farm payrolls increase by 154,000, right? This is going to be lower than the 12-month average, right? The green dotted line here is the 12-month average for non-farm payrolls, which currently stands at around 195,000. Although we saw a very strong rebound in November with 227 jobs being added in November, marking a strong recovery, right? We can now see job growth starting to taper off for December as well. So similarly to the ADP employment report, right? Although it is not so noticeable just yet for non-farm payrolls, whereas ADP, we are likely to see the second month of slower job growth. For non-farm payrolls, this would mark the first month of slower job growth as well. So if we do see a weak employment report by the Bureau of Labor Statistics, this could once again create downward pressure on the dollar. All right. Hi Watson. Hi Jamilu. All right. Hi Joey. All right. Yep. Definitely. Yep. We can cover EuroCAD, the Aussie as well. But let's start with the dollar index. Work our way through the major currency pairs, some of the major currency pairs, then touch on EuroCAD, and finally move on to Bitcoin. Right, and then go on to the commodities and indices as well. All right. Okay. So now let's dive into the charts and trading view, and of course begin the analysis on the dollar index. Right. So here we are on the daily time frame. So we can see very clearly since September, end of September, right? Remember the first rate cut by the Fed took place on 18th of September. They've made three consecutive rate cuts since then. However, we've actually seen the dollar index stabilize at around 100.30, rising as high as 109.53 last week. Right, we saw over this period, right, from end of September till now, over this period we saw an improvement in jobs figures, and also we saw strong GDP growth, as well as headline CPI, core CPI, as well as PPI data all accelerating, right? All of these factors contributing to higher demand for the dollar, right? So despite the Federal Reserve making three consecutive rate cuts over this period, we've actually seen demand for the dollar pick up very noticeably, causing dollar index to jump from 100.30 to as high as 109.53 over this period, right? As we saw strong macroeconomic data out of the US fuel strong demand for the dollar. Now, looking at just uh, how much of a gain is made from trough to peak, this has been a nearly a 9.4% jump in the value of the dollar index, right, from trough to peak. And looking at where it closed last Friday, this marked almost almost 8 point or just 8.7%, right? So huge jump for the dollar index here. Now, last Friday saw the dollar index uh, dip under 109, right, after hitting a high of 109.53 on Thursday. This index then dipped under 109 to close at 108.92. Now, this downward slide is likely to extend as markets reopen shortly, right? And I see a nice, I would say I see a nice pullback support level at 108.48, right? There's a nice pullback support level here. Previously, this level functioned as resistance back on Thursday and Friday, 19th and 20th of December. And once the bullish breakout took place on Thursday, 2nd of Jan, right, this level is now likely to function as a pullback support, which is also accompanied by a Fibonacci retracement at 23.6%. This retracement level was found starting from here, this swing low on 6th of December, going up to the high here on the 2nd of Jan. We can see that a 23.6% Fibonacci retracement accompanies the pivot level, which is the pullback support. We can also see the 50%. We can also see the 50% Fibonacci retracement accompany the first support at 107.49, which is also another pullback support. And we can see previously a swing high resistance being formed on Monday and Tuesday, 25th and 26th of November. And of course, once the bullish breakout took place on Wednesday, 18th of December, this level is now likely to function as a pullback support, which is accompanied by not one, but two Fibonacci levels, right? This first one is the 50% retracement from this uptrend here that began on 6th of December. And the second one is from this uptrend here that began on 27th of September. Right, so just to recap, we can see the dollar index in a very strong uptrend, and it continues to trade above the green Ichimoku cloud, which highlights the ongoing bullish momentum. And after making a high of 109.53 last Thursday, the dollar index slipped under 109, and it could continue to slide lower. However, I think any further downward movement for the dollar index is likely to stabilize at the pivot, which is at 108.48, which has been identified as a pullback support. That's accompanied by Fibonacci retracement at 23.6%. The first resistance, of course, is simply going to be close to where the swing high took place last Thursday. That's around 109.25. And the first support underneath the pivot is another pullback level at 107.49. And so we're looking for potential bullish bounce for the dollar index should it reach this pivot level over the next couple of days. Right, let's move on over to the euro. We'll cover the euro, dollar yen, the Aussie, and then we'll cover euro CAD. Right, and then we'll move on over to Bitcoin as well. All right, so looking at the euro, right? So if we've seen the dollar index stage a very strong rebound since end of September and making a pullback last Friday, right? We can of course the exact opposite for the euro, right? We see a very prolonged downtrend that of course began at the end of September with the euro reversing sharply from about 1.1216 to as low as 1.0224, right? So once again from peak to trough, this move was as large as nearly 8.9%, right? And with euro making a nice rebound on Friday, this move is now as this drop is much as large as 8.10%, right? Huge move over the last in the fourth quarter of 2024 for this currency pair as well, right? So of course with the dollar index slipping under 109 last Friday, we can of course expect the euro to stage a pretty decent rebound, right? It has managed to climb above 1.03 1.0300 to close at 1.0308, and this rebound here is or retracement to the upside is quite likely to continue as well, right? Remember, the dollar index could continue to slide lower as markets reopen today, slipping all the way down towards the pivot, which is the pullback support at 108.48. So with that, we can probably expect the euro to continue to climb higher, and where it could run into resistance is at 1.0419, which is an overlap resistance which has been identified as the pivot. Take note that this currency pair continues to trade underneath the red Ichimoku cloud, which highlights the ongoing bearish momentum. Right, there's probably a nice descending trend line that we can draw as well, right? We probably got pretty decent descending trend line, although it's just one touch over here, but we can of course see very clearly that this currency pair continues to trade in a prolonged downtrend. However, I see a nice overlap resistance at 1.0419, which has been identified as the pivot. So any retracement to the upside for the euro is likely to stall around this level, and is also has Fibonacci retracement at 23.6%, just slightly above it here. Right, of course, this retracement was found starting from this swing high on 25th of September, going down to the low of last Thursday, and we can see that the 23.6% retracement sits at 1.0558, slightly above where the overlap resistance at 1.0419 sits, which has been identified as the pivot. Higher up, the first resistance at 1.0598 is like a multi-swing high resistance, right? We see the first swing high taking place here in 19 November. Actually, there's like the three mini swings here. The second one on 29th of November, and the third one here on 6th of December, right? You can see very clearly this is a pretty strong resistance barrier that's accompanied by Fibonacci retracement at 38.2%. Alright, so that's how the first resistance at 1.0598 has been identified. And of course, in terms of support, this little rebound here that occurred last Thursday and Friday is where the first support for the euro sits at, and that's at 1.0255. Right, now let's move on over to dollar yen. Right, since the third week of September, dollar yen has stabilized at around 140.35. Right, remember this was in mid-July till mid-September. Over this two-month period, this was the yen carry trade unwind saga that had unfolded, right? The yen carry trade unwind that had taken place here, causing demand for the Japanese yen to surge, and which of course that would mean dollar yen to drop sharply, right? This reversal here, right, from 161 to 161.65 dropped as low as 139.56. This drop here, right, from peak to trough was as large as nearly 13.9%, right? Just over 13.8% over a period of 2 months. A huge rally in the yen, which of course that would mean that would cause dollar yen to reverse and tumble sharply. Right? A huge move in a matter of 2 months. But since then, we've seen the dollar yen stabilize at around 140, 141, and stage a very strong rebound all the way till mid-November. Right? This was a very strong rebound as well from trough to peak. This rebound was as high as 12.3% in a matter of uh, 2 months as well, right? A matter of what, 6 to 8 weeks. And then we saw another sharp pullback for the dollar yen in mid-November till early December. This pullback was as large as 5.2% before finally staging a very strong bullish reversal in the first week of December to climb as high as 158, or briefly surging past 158 right at the end of last year. Right, so you can see dollar yen, right, in a strong uptrend, of course, with strong pullbacks along the way, right, as what we saw in the third week of November here. Right, so dollar yen, sorry, is trading at around, or well, closed at 157.26 last Friday, and is trading above what I see is an overlap level at 156.24. So this has been identified as the pivot, right? We can see the dollar yen making a nice swing high resistance here in mid-November, and once the bullish breakout took place on 19th of December, we see this level functioning as a nice support area, with dollar yen bouncing off this level a couple of times, first on 20th of December, and on the second time on the 31st of December as well. And we can also see that this overlap level, which is 156.24, is also accompanied by a Fibonacci retracement at 23.6%. This retracement level was found starting from this swing low here on 3rd of December, going up to the high of Thursday, 26th of December here. Right, so that's how we found a 23.6% retracement that accompanies the overlap support, which has been identified as the pivot. Looking slightly below, right, there's another nice overlap level at 152.92. We can see that previously back in early May, this level functioned as a nice swing low support here in the first week of May. Then we see a little bit of consolidation here at the end of July, and then of course we saw the breakout take place, the bearish breakout take place in August, and then as the rebound materialized right at the end of September, we saw dollar yen running the resistance at around 152.92 right at the end of October. Then we see a nice pullback support taking place in mid-November, and another nice pullback here taking place on the 17th of December as well. So you can see this is a pretty significant overlap level that we can identify as the first support, and is also accompanied by Fibonacci retracement at 61.8%, just slightly underneath it. Right, so of course, if you're expecting dollar index to slide towards its pivot, which is a pullback support level at 108.48, we can definitely also expect the dollar yen to experience a similar move, falling towards its pivot at 156.24, which is an overlap support to stage a rebound. And the next resistance for dollar yen is likely to be around 161.65, which is the swing high resistance that had taken place right at the beginning of July. Right. Okay, so these are the key levels here for dollar yen on the daily time frame. Let's move on over to the Aussie, and then we'll cover Euro CAD and Bitcoin. Right. So of course for the Aussie, right, naturally, if we see the dollar index staging a very strong rebound since the end of September, we can definitely expect the Aussie to be trading in a prolonged downtrend as well, right? Even here, right? Of course, first of all, we can see that the Aussie continues to trade underneath the red Ichimoku cloud, which highlights the ongoing bearish momentum, and there is probably a pretty decent descending trend line as well in place, right? It's a pretty descending trend line. Actually, it might look more like a bearish channel, right? Let me take a look. Let's try it out. And we've actually got a pretty good bearish channel for the dollar, for the Aussie here, right? We see a couple of touches to the upside or to the upper trend line of the bearish channel, and we see a couple of touches to the lower trend line of the channel as well, right? So you can see the Aussie continuing to trade in a prolonged bearish downtrend, and it managed to stabilize last Tuesday and Wednesday, or last Tuesday and Thursday at around 61.79, right? So it's currently, and it closed at 62.16 last Friday. And if you're expecting dollar index to slide lower, right, then definitely we can expect the Aussie just like the euro, to retrace a little bit higher. Now for the Aussie, where I see resistance is at 63 cents, right, which has been identified as the pivot, right. Zooming out a little bit and looking at the chart in early October, right, we can see a very significant swing low taking place here, right, almost like a triple bottom. First swing low bounce taking place in early October, second in mid-October, third at the end of October, and the fourth one right and in the final week of October as well, right. This is a very strong support level, or previously this functioned as a very strong support level for the Aussie in October, which finally gave way, right, which finally gave way very easily in mid-December, right. What was previously a very strong multi-swing low support back throughout October 2023, right, gave way very easily in mid-December of 2024. Now, what was previously a strong support area can now potentially function as a pullback resistance, and that's at 63 cents, which has been identified as the pivot. Higher up, right, higher up for the Aussie, right, there's another nice pullback resistance at 63.98. Once again, we see a nice swing low support taking place here in April of 2024. Pardon. Then we see another sharp bounce as well on in early August, and then we see a little bit of consolidation here, right, on 6th and 9th of December before this level finally gave way. So this is also another pullback level that can be identified as a pullback resistance at 63.98. And of course, the first support is at the first support is at 61.79, which is the swing low that has taken place last Tuesday and Thursday, 31st and 2nd Jan, right. So any retracement for to the upside for the Aussie is likely to stall at 63 cents, right. This is a pullback resistance level here, and we can see that this is also close to where and also it's close to where the upper trend line of the bearish channel intersects with the pivot, right. So this is very likely to be a strong resistance zone for the Aussie here. All right, okay, so we've covered we've covered the dollar index and a few of the major currency pairs. Let's take a look at Euro CAD, and then we'll jump over to Bitcoin as well, as what Watson and Nick would like to see. So let's move on over to Euro CAD. Right, okay, so looking at Euro CAD, okay, let's start with a clean slate. Right, so you can see here it's sort of pretty choppy, right. There's no clear okay, there's actually a pretty clear uptrend, right. We see a nice swing low taking place here. In the third week of November, right. And this rebound in Euro CAD has been pretty choppy, right, with we can see clear zigzag patterns taking place along the way, and finally it broke out of this bullish channel, right. I would say that's a nice bullish channel here. This could have been like a very prolonged bear flag as well, right, after making a significant downfall here since in the first 3 weeks of November, right. Euro CAD hitting as high as 150-160, right, at the beginning of November, and dropping as low as 144.80 by the third week of November, right. We can see this reversal here, or this drop was as large as 4.5%, huge move for the Euro CAD over a period of 3 weeks, and then there was a strong rebound, right. Euro CAD rebounding as much as 4%, right, from trough to peak, and then we see another bearish reversal take place right at the end of 2024 and early this year as well. We actually see, right, there's a maybe I would say, right, was a pretty decent bullish channel here, right? I would say that's a pretty decent bullish channel for the EuroCAD, right, at the end of in December. Right, that was a pretty decent bullish channel, right at the end of December till end of December for a period of 4 weeks. Nice bullish channel for the EuroCAD before we saw the bearish breakout take place on New Year's Eve, and then on New Year's Day this currency pair dropped even lower. However, last Friday, right, we saw this currency pair stabilize at around 1.4750 and stage a very strong rebound here. So let's see where the resistance could be, right? Let's identify a potential pivot, right? I see a multi-swing high resistance for EuroCAD, and that's at around 150.23, right? This is a multi-swing high resistance that had taken place in December, and which we can identify as the pivot. And there's another swing high resistance, or yeah, this level is another multi-swing high that has been in place since August of 2024, right? We see a nice multi-swing high resistance that's been in place since August, and we can identify this level as the first resistance, and that's at 1.5164. So what we're looking for here is for EuroCAD to potentially stall at this pivot at 150.23, which is also a multi-swing high resistance. Right, hi Devil. Yeah, definitely we'll be covering crypto as well, right? So once we're done with EuroCAD, we'll be jumping to Bitcoin and Ethereum, and then we'll move on over to the commodities and the indices. Now, in terms of support, right, there's probably what I would say close to where this reversal took place last week, right? This is pretty a small pullback level that had taken place here, right, at the beginning of December, right? This is at 147.34. This is where I would identify the first support, and we can probably run a nice Fibonacci retracement as well from this swing low on 22nd of November, going up to the swing high on the 18th. There might be a 61.8% that we could use. Okay, actually not really. None of the Fibonacci retracements actually align close to the first support, so that's fine. Don't force the Fibonacci retracement into the analysis if it doesn't line up well with the predefined pivots and support or resistances. Now on this downtrend here, we can run another Fibonacci retracement from this swing high on 4th of November, going down to the low on the 22nd of December. Let's see, the 78.6% is a level that we can use. Right, there we go. 78.6% aligns very well with this multi-swing high resistance that had taken place at the end of December, which has been identified as the pivot. Alright, so with that, now let's move on over to Bitcoin. So after making its intraday all-time high on Tuesday, 17th of December, right, Bitcoin hitting $108,391. It has been it has pulled back quite sharply before stabilizing at around $91,870, right at the end of December, right? We can see that this pullback in Bitcoin was as large as 15.8%, a huge pullback for this coin over a period of 2 weeks, right? There's definitely no Santa Claus rally for Bitcoin, but it does look to have stabilized at around $91,870, right at the end of December, and looks to have staged a pretty decent rebound so far, right? We can see Bitcoin rebounding as much as 8.5%, right, over a few days, and this bullish bounce is likely to continue, right? We can see that Bitcoin continues to trade above the green Ichimoku cloud, which highlights the bullish momentum, and at the same time the cloud itself can function as an area of support, which is what has happened at the end of December, right? This level here at 91,869 is an overlap level, right? We can see a little bit of resistance for Bitcoin here in mid-November. We see a nice swing low bounce taking place here on 26th of November, another nice bounce here on the 6th of December, and of course this period here we see Bitcoin bouncing off this level several times from the third week of December as well. So this creates an overlap level which we have identified as the first support. And we see Bitcoin, and I see Bitcoin rising up towards pullback resistance, which is the pivot, right? That's been identified at $102,000 and $102,160. And we can see here Bitcoin previously running into resistance at around 102,000 from 5th December till 14th of December. And then once the bullish breakout took place and Bitcoin dipped under this level, can potentially function as a pullback resistance, which is where it could stall once more, right? As we see Bitcoin probably going to continue rising up this week, and it could probably stall at around the pivot at $102,000 and $102,160, which is a pullback resistance level that's accompanied by a Fibonacci retracement at 61.8%. Right, how did we find this retracement? Right, we started as a Fibonacci retracement from this swing high at the intraday all-time high on 17th of December, ending on 30th of December. And of course, the first resistance for Bitcoin is going to be close to the swing high that had taken place on 17th of December, and that's at around $106,450 here. Right, so expecting Bitcoin to continue to climb higher, and where it could stall is at the pivot, which is a pullback resistance that's accompanied by Fibonacci retracement at 61.8%. Right, now let's move on over to Ethereum. Ethereum looks to be, at least over the weekend, right? At least over the weekend, Bitcoin looks to be stalling at around 3,634, right? This level here has been identified as the pivot, which is a pullback resistance level. Previously, we see a nice swing low bounce taking place here in mid-December, right? And it looks where Ethereum has stalled over the weekend, and is also accompanied by a Fibonacci retracement at 38.2%. Now, this retracement level was found starting from this swing high on 16th of December. Oops, how did that happen? Going down. Oh, wait, sorry. Let me do that again. Somehow this is more likely to be the 50% retracement. Yep, it's actually no, not 50. It's actually no. This retracement should not be used. Right, of course, 33, 38, and 50% can no longer be used as price has climbed above it, and 61% is just simply too high. But perhaps, because since it's the golden ratio, right, I'm just inclined to keep 61.8% and identify this as a resistance zone for Ethereum. Right, so we can see that Ethereum has stalled at the pivot, which is within the 61.8% Fibonacci retracement zone, and it could potentially slide back towards the first support at 3,248, which is this little support level here that has been in place since 22nd of December. This little support level is also accompanied by a Fibonacci retracement at 38.2%. We found this retracement by starting from here, this swing low on 5th of August, going up to the high on 16th of December. Right, and of course, the first resistance for Ethereum sits at 4,094, which is this multi-swing high resistance, right, which has taken place here. The first swing high resistance taking place on 6th of December, and of course the second one taking place on the 16th. Right, similarly to Bitcoin, right, Ethereum managed to find support within the green Ichimoku cloud, right? Remember, the Ichimoku cloud not only highlights the current ongoing momentum, whether it's bullish or bearish, the cloud itself can function as an potential area of support when it's green in color, and of course it can function as a potential area of resistance when it's red in color, right? So this is a good example here, right? As Ethereum retraced higher, it stalled within the red Ichimoku cloud, pulled back quite sharply before finally making a bullish breakout through the red cloud. Over here, right, in the current in the present moment, right, or rather in the most over the last couple of weeks, we've seen Ethereum stabilize within the green Ichimoku cloud here. So take note of the Ichimoku cloud, how we can use it, right? Not only is it a momentum indicator, the cloud itself can function as an area of resistance or as an area of support. Right, okay, so we've covered dollar index, a few of the major currency pairs, crypto, Bitcoin, Ethereum, and EuroCAD. Let's move on over to the indices, looking at gold. And when we look at gold, we actually see that it's sort of just trading sideways. And if you look at it since mid-November, spot gold prices have just been trading between this range here, bouncing off $2,560 on the lower bound and running the resistance at $2,720 per ounce on the upper bound here, right after a very strong bullish run, right, that had, I would say, probably commenced since October of 2023, right. We see a very strong bullish uptrend for gold prices here. This trend here, let's just say take it from this trough to the intraday all-time high, which is the peak here, right. We've seen gold prices surge more than 52% from October 2023 all the way till October of 2024, right. So over 52 weeks, right, gold prices have soared more than 54% here. Now, looking at where it is currently trading, right, we saw spot prices close at $2,639 per ounce last Friday, and it could continue to slide lower towards the lower bound of this sideways channel, which has been identified as the pivot, right. We can see the pivot is at $2,559, right. It is actually a nice swing low support that had taken place here on mid-November. We saw also a little pullback here in mid-September as well. So this is a pretty decent support level, right, which is the lower bound of the sideways channel that has been identified as the pivot, and is also accompanied by a Fibonacci retracement at 50%. Now this retracement level was found starting from this swing low here on 3rd of May, going up to the intraday all-time high for spot gold, and which occurred on 31st of December. Oops. Right, little bit below, right, I see a nice overlap level for spot gold, right. We see a swing high resistance taking place here on 17th July, another swing high here on the 2nd of August, resistance here as well on 15 August, after which this level proceeded to function as support, with gold prices bouncing on this level several times since 22nd of August, creating a very nice overlap level at $2,483 per ounce, which is also accompanied by Fibonacci retracement at 61.8%. Right, so with gold prices pulling back slightly last Friday, any further downward slide for this precious metal is likely to stabilize at around the pivot, which is at $2,559 per ounce. And resistance is very clear, it's this multi-swing high resistance that has been in place since 22nd of November. Right, is there a Fibonacci retracement that we could use here as well for this downtrend here? Let me see. Is there 78.6% that we could use? Right, maybe, yeah, let's just keep the 78.6% on that on over here and highlight this as a resistance zone. Right, okay, so these are the key levels for spot gold. Let's move on over to XTI USD. So this is the instrument that tracks the WTI crude oil futures, and since the 3rd week of December, we've seen crude prices rebound very strongly, right. This bounce here from this trough on 20th of December to the high of last Friday was as large as 8.3%, and if we go back to this swing low that had taken place here in the 1st week of December, right, this upward move in crude oil has been as large as 11.2%. So huge rebound in crude prices, breaking above an overlap resistance, right. The first support at $72.73 previously was an overlap resistance, right. We can see a swing low taking place here in early June, second swing low taking place in early August, third swing low and in the 3rd week of August. Then we see crude oil running into resistance here at the end of September, support once more on 9th of October, and then resistance since 22nd of October very clearly. This was previously a very strong overlap resistance level, which finally got taken out last Thursday as crude oil made a bullish breakout above this level. So what was previously a strong overlap resistance can now potentially function as support. So that's how we've identified the first support for crude oil at $72.73 per barrel. Now, crude oil could likely rise up towards the pivot. The pivot has been identified at $75.96. This is a little resistance area that has taken place here on Thursday and Friday, 10th and 11th of October, right? As crude oil prices fell sharply in mid-October, right? It's or the second week of October. It made a retracement to the upside, a pretty strong retracement to the upside on Thursday, 10th of October, but it stalled around this level here before resuming the downtrend. So this is where I think the next resistance for XTI USD could materialize, right? And this is at around $75.96. Beyond that, the first resistance at $78.08 is a multi-swing high resistance, right? That has been in place since 26th of August. We see the first swing high taking place here, 26th and 27th of August, and the second swing high taking place on the 8th of October. Right, so take note, crude oil prices XTI USD has made a bullish breakout through a previous overlap resistance last Thursday, 2nd of Jan. This overlap resistance can now potentially function as the first support, and that's at $72.73 per barrel. It is rising up towards the pivot at $75.96. This is where I think crude oil could stall. And beyond that, the next major resistance is at $78.08, which is a multi-swing high resistance that has been in place since 26th of August. Right, now let's move on over to the indices. Alright, before I continue as well, I'm just going to launch a poll. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue with the indices. Right, truly appreciate it if you guys can give your feedback with regards to today's webinar, as well as smashing the like button on the YouTube page as well. Right, okay, so let's resume with the indices, right? Taking a look at US 30, right? US 30 is the instrument that tracks the Dow Jones futures, and we can see after making this intraday all-time high in the first week of December at around 45,105, right? Dow Jones or US 30 has made, I think almost, this is a 11-day streak, 11-day losing streak, right? Going from peak to trough, dropping nearly 6.9%, whereas the peak is here, I believe, right? Intraday all-time high was on 4th of December, right? This peak to trough was as large as 6.9%, huge move for the Dow, and it has sort of stabilized at around 42,305 first on 19th of December, and then at the beginning of this year as well. Right, so what I see as the first major support for the Dow Jones is at this swing low here. There's a nice swing low taking place here in early November, right? That's how the first support at 41,777 has been identified, and is also accompanied by a Fibonacci retracement at 38.2%. Right, this retracement was found starting from this swing low here on 19th of April, going up to the intraday all-time high, which is on 4th of December. Right, we can see the 38.2% retracement sitting pretty close to the first support, which is a swing low support here, and which is where the Dow has stabilized, not once but twice, first on 19th of December and then again on the 2nd of Jan. Right, higher up, I see a nice overlap resistance at 43,347, which has been identified as the pivot. right? We can see uh, swing high resistance taking place here on 18th of October, a swing low taking place here on 18th of November, and then another resistance here on 26th as well. So this creates another overlap level that we can identify as the pivot, and it's also accompanied by a Fibonacci retracement at 38.2%. So this retracement level was found starting from this swing high on 4th of December, going down to the low here on the 20th of December. Beyond the pivot, which is an overlap resistance, I see a pullback resistance at 44,327. That's at and it's also accompanied by Fibonacci retracement at 78.6%. Right. Thanks for those who have voted as well. Truly appreciate it. Just closing the poll now as well. Now moving over to the DAX, DE40 is an instrument that tracks the DAX futures, and after making this intraday all-time high on Friday the 13th of December, right, DAX has pulled back quite sharply as well, falling as much as 4.4%, nearly 4.4% from peak to trough, and has stabilized at around 19,900 since then. So the pivot level has been identified as an overlap support that's at 19,681. And we can see previously the DAX running the resistance here in the third week of October, and then finding support on the 20th of December. This level here is accompanied by not one but two Fibonacci retracements. We have the 50% retracement level that was found by starting from this swing low on 19th of November, going up to the intraday all-time high on the 13th of December. The second retracement level was found starting from this swing low here on 5th of August, and once again ending at the intraday all-time high. So this overlap level at 19,681 is accompanied by not one but two Fibonacci retracement levels, and this overlap support has been identified as the pivot. We're looking for a potential bullish bounce of the pivot here for the DAX. Right, it has stabilized just above the overlap support over the last few days. However, if it does return to this overlap level here, if it does return to the pivot, it's quite likely to stage a rebound, and if that rebound does materialize, where it could of course run into resistance, is close to the intraday all-time high that was formed on 13th of December, and that's around 20,427. Looking a little bit below, there's another nice overlap support at 18,971, which has been identified as the first support. Right, we see resistance here on 2nd of September, resistance here in the third week of September, swing low bounce taking place here in the second week of October, and then again support in mid-November as well. So this creates a very nice overlap level, which we can identify as the first support. And finally, we wrap things up with US 500. High level, we had already covered oil as well, right? We covered oil after crypto, after Bitcoin as well, right? I think you managed to catch that as well, yeah. So US 500, let's wrap things up with US 500, right? We see a nice double bottom here taking place for US 500. This is an instrument that tracks the S&P 500 futures, right? We see US 500 bouncing off 5,861 not once but three times now since 19th of November, and we also see that it previously ran into resistance on in mid-October, right? So after resistance in mid-October, this level proceeded to function as strong support since 18th of November, making not one but three bounces so far. So this is a nice overlap level at 5,867, which we can identify as the first support, and it's also accompanied by a Fibonacci retracement at 23.6%. Now the pivot at 6,088 has been identified as a swing high resistance close to the intraday all-time high. This level is also accompanied by a Fibonacci projection at 100%. We found this projection level starting from here, 0.1 on 20th of December, going up to 0.2, 26th of December, and ending at 0.3 on the 2nd of Jan. So you can see the 100% projection level, right? It's right here, the 100% projection level, sitting quite close to the intraday all-time high, which has been identified as the pivot, which is the swing high resistance. Beyond that, the next major resistance could come in at 6,287. Remember, beyond the intraday all-time high, there's no other level that we can reference. There's no other swing high resistance or overlap resistance that we can reference. In such a scenario, we would rely on Fibonacci tools such as Fibonacci projections and Fibonacci extensions. In this case, we've used the extension at 161% to help us identify the first resistance. Now, this extension level was found starting by using a retracement from this intraday all-time high on 6th of December, going down to the swing low here on the 20th of December. And once again, right, remember the green Ichimoku cloud not only highlights the ongoing bullish momentum, the cloud itself can function as an area of support, which has happened not once but twice on 18th of December and then again on 2nd of Jan. Hi Watson, US 100. Okay, no, we can, we've got a little bit of time. We can wrap things up by looking at US 100. Alright, sure, let's wrap things up by looking at US 100. This should be US Tech. Yeah, US Tech 100 index. Looking at that, right? For this, right, maybe let's start with a clean slate so it's easier for this, because I think the last time I did this was quite some time ago, the analysis for US 100. Right, so you can see here, since making the intraday all-time high on 16th of December, this instrument has dropped as low as 20,708. Right, this move from peak to trough was as large as 6.5%, but it has stabilized right around 20,890, not once but twice. Right, so I would identify this level here as, if I look across, not cleanest level, but probably, yeah, this is where I would identify the first support for US Tech or US 100. And I think where you can run into resistance is at this little swing high that has taken place here on 26th of December. That's at 21,764. This is where I would identify the pivot. And we can probably run a Fibonacci retracement as well from this, from the intraday all-time high on 16th of December, going down to the swing low here on 20th of December. We can see the 78.6% retracement sitting pretty close to the pivot, which is a swing high resistance. We can probably run a Fibonacci retracement as well, starting from this swing low, 5th of August, going up to the intraday all-time high. Let's take a look at all the fibs. We can see that, okay, since 23.6%, since US 100 has already fallen underneath 23.6% that took place on Thursday, 2nd of Jan, we can't use this retracement, right? So that's fine. Maybe there's another retracement that we can use from this swing low here on 6th of September. But again, we don't really see the 38.2% sitting pretty close here. Maybe we can use the 38.2% because we see these 2 wicks dropping as low as 20,710. So let's just keep 38.2% here. And just highlight this as a zone. And higher up, right, close to the intraday all-time high, right, close to the intraday all-time high. We can probably run a Fibonacci retracement from this. On this downtrend, we are looking specifically for the Fibonacci extensions at 127 and 161%. And we can see that the 127% extension sits pretty close to the intraday all-time high. So we can identify this as the first resistance. And of course, should we see US Tech stage a very strong rebound, right, and if it breaks the previous intraday all-time high, the next resistance barrier could come in at the Fibonacci extension at 161%. Right, but for now, I think any rebound to the upside for US 100 could stall at this swing high resistance, which is the pivot, and is also accompanied by Fibonacci retracement at 78.6%. Alright, so that brings us to the end of today's webinar, right? Once again, thanks everyone for tuning in and giving your feedback and feedback as well, right? And just let's just wrap things up by taking a quick look at the calendar. So take note, it's the US jobs week this week, right? We've got not only do we have Joel's job openings on Tuesday 7th of Jan, we also have the ADP employment report on Wednesday 8th of Jan, followed by the Bureau of Labor Statistics employment report, which is going to show us the non-farm payrolls figure and the unemployment rate. That's on Friday 10th of January 1:30 p.m. GMT time. In between, we also have the release of the minutes from the FOMC meeting that took place in December. We also have CPI data for Australia, the Euro area, and Switzerland, among other data as well, which includes employment change out of Canada, retail sales out of Australia, and inflation figures out of China as well. All right, so do look out for these events because are going to have a huge impact on that particular currency, as well as having impact on the broader market as well. All right, so do look out for once again, thanks for tuning in for today's session, and do look out for all upcoming webinars brought to you by IC Markets for this week. Right, we've got a combination of live analysis and educational topics in English, Bahasa, and Thai. All right, thanks everyone, take care, have a great trading week, and catch you all in the next session.